This video is going to help you understand your finances better. As a business owner, whether you've been in business for many years or you have just started, you don't want to be completely dependent on your accountant. You don't want to lose credibility in front of your banker or any potential investor just because you failed or struggled to talk about your finances with confidence. You want to feel more in control of your finances, and what I'm going to tell you in this video will get you there. Today we are going to talk about income statement, and you're going to understand exactly what an income statement means and what you need to do to make it look good. Well, first of all, an income statement, or in other words, a profit and loss statement, is key in your finances. This is one of the main financial statements that your accountant needs to produce to show how your finances are doing. In other words, how your business is doing. And by looking at it, any lender will instantly see how well your business is performing. First of all, income statement equals performance. You need to keep that in mind. Sometimes people get confused between, income statements, balance sheet, cash flow statements. All of these words don't make sense to us. To make it clear and simple, remember, income statement tells you about the performance of your business. In other words, it tells you, when you look at it, how much money you're making, if you're profitable, and also if you can control your costs. So if I want to find out about your performance, what does it mean? It just means that I want to know if you've made enough money. I want to know if you have been profitable this year, or if you had some major, crisis in your business. You didn't have sales. What happened to your business? Is that going up or down? Remember, it's all about not only 1 year, but it's about a trend. And when I'm going to look at your business, I'm going to inquire how your business has been performing throughout the years since it's been set up, if it's a recent business, or at least in the last 3 years if it's older than 3 years. And also, I will also find out if you're a good, cost manager, if you manage well your costs, how you're running your business. I will be able to see that. I don't need to talk to you. I will just look at your finances, and I will see straight away, from my understanding with the tools that I have, by using the figures that you give me, how much money you're making and how well you're doing. So this is extremely important for you as a business owner to understand which key figure your banker or anyone, any investor who is interested in your business, it is important for you to understand what is going to focus on so that you can understand how you can improve this and make your business, grow even further. This is an example of an income statement on, as I said, a profit and loss statement. So this business has been at least there for 2 years, maybe more. But what I have in front of my eyes is, the figures in the last 2 years. Remember, I'm talking also about trend. So I'm going to look at the variation between year 1 and year 2. The first major item that comes in an income statement is your sales, your revenues, turnover, whatever that is called. That means how much money you've been making. Here I see that, sales 300K, it has increased by 350 overall, a good increase of, by 16.6%. If I go further down, I look at the cost of sales, which means you've in order to produce your sales or to create your product or your services, you have bought some material, you need maybe some raw materials. All of this is taken into account, is the cost of your sales, how much money you had to invest or pay to be able to deliver your services or to create your product that you could sell. So my cost of sales is going to include all of the payment to any raw material again, or anything that you needed to deliver your product or service. Here I can see an increase by 10%. At the same time, I will notice that whilst your sales have increased, the cost of sale didn't increase as much. So I'm going to keep in mind that that's fine. You have managed to control your cost. So this is a plus for me. If I am a banker, I'm going to take it as something positive. Sales minus cost of sales give you your gross profit. And here I can see that you have done well. Figures have gone up, and your gross profit has increased by 18%. This is good to me. If we go further down, we see the overheads. So sometimes people can get confused between cost of sales and overheads. Overheads means payment to your staff, electricity bills, phone bills, anything that you need to have your business running, but that doesn't contribute directly to creating your product itself. Let's say if I'm a baker, I will need a lot of material to create my bread, but the payment of the rent is going to go in overheads and not cost of sales. So again, the overheads will include everything that is salaries, bills, and everything again that you need to have your business operating. Again, a small increase by 5.7%, so I'm still happy with that. At the end, I will take the overheads, so gross profit minus my overheads will give me my net profit, which is what I have really reported as a profit, because you can have a lot of sales, make lots of revenues, but if you have a lot of costs and a lot of overheads, your profit sometimes can become a loss. So you have situations where companies have done really well. They have sold. They got a good, strong turnover, but their costs exploded. They didn't manage to control their costs, or something happened. The cost of their raw material went up, and it caught up with their sales, so they end up being loss-making. So your net profit tells you, in terms of profitability, how much you've made and how well your business did. So it's great to have a lot of sales, but at the end, as they say, the bottom line is key. And here we can see that it has been tremendous year because the net profit increased by nearly 50%, which is huge. So remember, figures on a standalone basis are great, but most importantly, if you want to understand how bankers or anyone who wants to assess your business is going to look at your figures, they're looking for trends, because they want to know if you have a volatile business or if this is something that is going on a consistent basis, and even better if everything is going up. Obviously not the cost, but the sales and your profit. So I hope this helped you. Please send me your questions if you want me to focus on a particular point, if you want some clarification on one item or another. I will be happy to come back to you and create some new material to make you understand your finances better. Thank you.